Good morning. It is December 26th, the day after Christmas, and the stock market's open. Although the market's not going to have a lot of trading today. I think the between days between Christmas and New Year's, you don't have a lot of volume of trading, but it's actually a fun time of the year for me. I usually have some time off, and I could, as an individual investor, really do a little extra in analyzing my portfolio and get ready for the new year, which is going to be 2025. It's been a really good year this year, and let's see how 2025 is going to shape up to be. I think it's going to be a good one. We have a lot of pro business, pro stock, pro asset policies that I expect over the next 4 years. So, welcome to the live stream. If you have a stock, a topic, something you want to talk about, please put it in the chat. We'll go over that. We've been having some really good live streams, and I appreciate everybody's attendance as well as their participation, putting in stocks that you think are interesting. And we've gone over some really interesting ones over the past week. Rotel and Cheese, thanks for joining, man. It's great to have you. And you are a regular, so I really appreciate it, and usually bring a lot of ideas and comments. So hopefully today is going to be the same. All right. So the market is kind of getting to a crawling start here. I guess maybe the market had too much eggnog yesterday, and the Dow is down a little bit. S&P is down. NASDAQ's down a little bit. Now, we did have a really good up day on Tuesday, so we're giving up some of the gains. And overall, the year has been great. So nothing to be overly concerned about. We're just having a slight pullback, and we'll see where the day ends up. It's really early. We're a half hour into trading, and for all we know, it's going to rally a bit or maybe drop a little further. Overall, not too concerned. Crypto has been dropping a little bit faster than the stock market. Bitcoin is down 4% if you measure the last 24 hours. And that is, for me, a buying opportunity. I'm buying Bitcoin under 100,000. And on a day like this, I'll probably drop another $500 into Bitcoin, another $500 into Ethereum to continue to build that alternative asset class in my portfolio, which is Bitcoin and Ethereum. I also own Coinbase. And we went over a neat company yesterday by the name of Clean Spark, which is a Bitcoin miner. And Bitcoin miners, I think they've got a big opportunity ahead of them. If you have Bitcoin trading at 100,000, 200,000, those Bitcoin miners, their revenues automatically are going up very fast. So I'm going to pay attention to the miners. So far, I'm tracking two miners, Clean Spark and then Bit Digital, and both look really good. Maybe I'll cover Clean Spark and Bit Digital a little later. So I see the comments starting to pour in. Rotel and Cheese. I have a couple interesting companies for you today. ASPN, ALAB. Cool. Yeah, let's take a look. Those sound pretty interesting. I don't know that I've ever covered those, so I'm glad you're bringing them up. And then ALAB. All right, cool. So just let me finish my opening comments, which aren't going to last very much longer, and then we'll get into those two stocks. So Asia had a small rally. At least some stocks that I'm seeing, like Baba and a couple of others, have a small rally. Looks like in Japan, the Nikkei is up 1%. I believe this is a Shanghai exchange. It's up 4.14%, which is a small rise. And these guys, they've been open all week. They didn't take yesterday off. They don't celebrate Christmas. But the market in China is up a little bit. In Japan, it's up quite a bit. And in Hong Kong, it's up about 1%. So that's what's going on in Asia. All right. So that's where we're at with the markets. Again, it's kind of a low volume day, and we'll see. Shane, thanks for joining. Yeah, I can cover Coinbase. Why don't I do that? Hang it tight, and I'll cover Coinbase and I'll show you my evaluation of Coinbase. I've been a Coinbase stockholder for some time, and I can show you where I think the price, where the stock is valued, in my opinion, where I think it's worth, and what I plan to do. So thanks for joining. I think it's your first time putting in a comment. Okay, let's go into ASPN. See what's going on with that. So ASPN, Aspen Aerogel, excuse me. So Aspen Aerogels designs, develops, manufactures, and sells aerogel insulation products primarily for the use of energy infrastructure, sustainable insulation materials markets in the United States. Okay. So batteries, I mean, we're electrifying so many things. Like my home, right? I put solar panels on my home, and I thought about getting battery packs. I'm glad I didn't, because they were rather expensive. And I think it's Moore's law, which is, and just in general, technology cost goes down over time. The product and performance, the quality keep going up. So I just didn't think the batteries are ready. So at some point, I think I'm going to get batteries, because right now my solar panel array produces the power that we need to basically have a zero cost electricity bill. But I'd love to store that power and then use it at night. I think it could save me even more. So I'm looking for batteries to get a little less expensive. These guys here are in a material that is needed in that space. And it's an industrial, I agree with that, building product and equipment. Yeah. I think they're a little more of a material than they are in this industry, but I'm not going to argue. Materials, yeah, I'm not going to argue with that. They're kind of like a 3M in my mind. The market cap's really low. These small caps can really go up and down fast. This hasn't gotten all crazy like some stocks. It's down 22% in the past year. Market cap 982 million. Revenue 413 million. So you're paying 2 times revenue. PE 599. Whoa. That makes Palantir look like a value stock. But we'll see why there's such a high PE. Forward PE is much more reasonable. 25. That looks like something up my alley. Okay. Strong buy, and analysts believe it's discounted by 157%. What is going on? This is what's going on, is this growth. So this growth looks really interesting. The most recent quarter, they grew at 93%. Great job. Before that, 144% in the second quarter. So something's going on here. Now, why is this revenue growth just screaming up, but the stock price is not? It's actually selling off. What do investors not like? Well, let's take a look at their fundamentals. This might be a good one to do a deep dive and do a valuation on, and we'll go from there. So they have operating income, looks good. They made money. In the trailing 12 months, they made money, but they did lose some money in fiscal year 2023 that ended, about a year ago, and year before that. So high growth companies could lose money, not out of the ordinary for growth companies to be doing that. And they will also burn cash. Now we'll take a look at their balance sheet, because maybe investors are worried they're going to run out of cash, and then what happens, right? If they can't pay their employees and stuff, that could be a problem. So we'll check the balance sheet. So free cash flow is negative for the time being. Okay. So their profit margin, what is going on here? So the gross profit really expanded. It might be because their volumes increased. So this looks like it's moved in the right direction. 40% gross margins is good. Okay. So I'm seeing really interesting fundamentals. The gross margins are expanding, revenue's growing really fast. Something about their product is in high demand. And overall, the addressable market continues to expand. It's not like, hey, we're going to see less electrification. No, we're going to see more. You're going to see more and more products. Like, as an example, the landscapers come to my neighborhood, and for as long as I can remember, it's all been gas powered. And I think still most of their equipment is gas powered, but I've noticed that some of their equipment is beginning to be electric. And I think we're going to see that conversion all over the place. Okay, so I like their expansion in gross profit. I like their revenue growth. I'm okay with the negative cash because they're a growing company. We need to study their balance sheet to see what's going on with their balance sheet. So they do have $113 million of free cash. And how much debt? Hopefully they have none. 203. Okay, so they have about $90 million of what I consider is net debt minus cash. And EBITDA is 69. So that's not anything to worry about. It's not too high of debt. They could pay it off in a year and a half if they focus their EBITDA, but they shouldn't. They should really focus on continuing to grow. That's where the company is going to create the most amount of value for stockholders. Okay, so I checked into the balance sheet, has cash. That's good. We're not going to run out of it. Let me return back to the cash flow and kind of dissect it a little bit more. I'm going into the quarterly, and I usually look at the annual, and that gives me kind of like a nice picture of the last 12 months, trailing 12 months. I could also look at previous years. So that kind of gives me a high level, broad vision of the company. But once I pick up on, okay, is there a problem, or is there maybe some information that needs further investigation? I get into the quarterly, and then that gives me specifics on, am I seeing a trend within the last 12 months that I should really consider, either a positive trend or a negative trend. So in here, we're looking at the cash flow statement, and Q2, they had some net income. They were a little profitable. All right. They had operating cash flows. See how we're going from negatives to now positives cash flow. That's a good sign. That's a green flag. That's good stuff. CapEx, understandable. Growing company. Hey, we got to build the facilities, maintain the facilities. We make what I consider as a material or a product that is needed for the electrification of vehicles and stuff like that. So that's okay. So in the most recent quarter, they were just barely negative. They're just barely negative cash. So you can see that they're improving. They're going from, we're burning a lot of cash because we're a new business. But now that we're really selling more product, we are negative or neutral on the cash flow. Well, this trend tells me that they're going to go positive in the cash flow area. So that is good news. They're going to announce on February 11th. This would be an interesting announcement because these guys are small. These guys are probably flying under the radar for a couple of reasons. One, they're small. Two, they're in a sector and in an industry that doesn't get a ton of attention. Now, if this said technology, semiconductor, you'd have 100 analysts looking at this thing. But since it's kind of hidden in a sector, that in an industry that's not that hot, maybe it's being overlooked. Okay, so we have 10 analysts covering this stock. So it's not a secret. Some analysts are like, this is going to be awesome. This is going to be a great company. And the worst analyst is, hey, you're only going to make like 18% based on their price target. all predictions are that this thing's going to go up. Their forecasts, and we've got 10 analysts looking at this thing. We've got a number of analysts putting data into this mix that they're going to keep growing. Now, the growth isn't going to be as incredible as it was in 2024. It's going to be at 10.7%. Maybe that's what disappointed some investors that, hey, what do you mean you're not going to grow at 90% every year? Maybe they have to kind of grow to a certain capacity level and then continue to grow later on, like they're going to in 26 and 27. So this here looks good to me. I could see that there's kind of a slowdown from a growth perspective, but this growth, this is incredible. I don't know why the stock didn't rally more. And they're expecting that this fiscal year, they are going to turn a small profit, and then that profit's really going to expand. Their profit is really going to expand. So this looks really good to me. So I'm seeing a lot of green flags with Aspen. Okay, so I like their fundamentals. Let me study them a little bit more. They're in Massachusetts. So thermal runway barriers, battery materials. They might be, I'm going to look at their financials because hopefully they give us a breakout of where the revenue is coming from. And anything related to energy has been kind of going down in 2024. So that might be the reason why investors are not overly excited, is if they have a lot of product here and they're really tied to the energy infrastructure space, then that's what might be limiting the amount of excitement in this company. Okay, so investors, let's see here, events and presentations. Let's try to get to their financials and dissect the company a little bit more. Okay, so let me make this a little bigger so you guys could see it. All right, so here they're talking about their debt. Okay, that's fine. Financial outlook. They're growing really well. Good job. So it looks like the thermal barriers that they use for highways is really growing fast. And then energy grew as well. Okay. So what the heck is a thermal barrier? So let me study their website a little bit more. This is where the company's growing. So mechanical thermal performance you can trust through EOL. So this is what protects, I guess, the So it looks like these car companies are really depending on Aspen if they're going to make electric vehicles. And looks like Honda and Acura is part of Honda. They're part of the customer base. I believe this is a Hyundai. Um, GM, Aspen. So this is what company's growing. Okay. All right. So obviously EV sales, that's where it's at. It seems like there are so many EV choices now. And EV sales are slowing down a bit, but it's still the future, especially internationally. I think EVs are going to, at some point, sell much better than gas powered cars because you have new competition coming in. All the competitors are coming out with the EVs. So I think the space continues to expand for them. So here's demand for thermal barriers. That looks really good. So I guess what, and I'm going to take my time through this one because it is interesting. But even beyond my review here on the live stream, I'm going to go look at this and probably watch a few videos. But just judging from, like my phone, when I put it on the wireless charger in the car, when I pick it up, it's really warm. And there's probably something to it that batteries kind of get hot and you don't want that heat in your cabin because it'll make it uncomfortable, especially in the summer. So maybe that's has something to do with it. I'm going to take a look at it. But the fundamentals for this company look really good. Okay. This is a good, interesting stock. And these guys are not into selling cars, which is good. I don't like car businesses, but they are into selling a product that's in high demand. The stock is sold off, which is interesting. This is a small cap. This thing can really fly up. I think this is a good stock. It could be. I'm not going to do a deep dive on it because there's just too many pieces that I have to really think through and kind of make the best assumption. And that'd probably take me about, 45 minutes or an hour. But what I would say is everything I've seen here leads me to believe that this is really worth my time in analyzing further and seeing, is this a good bet, or at worst, is it a stock that I really want to attend their next earnings and see if their fundamentals continue to follow the same trajectory. If the revenue keeps going up, if their gross margins keep expanding, if cash flow keeps getting better, profits there, it's like, man, this thing's solid and they're probably going to be acquired. I could just see other companies going, hey, if these guys have it together, talking about like 3M and material companies, they'll probably come in and say, hey, we'll give you $3 billion for the company. And, stockholders will be happy because they'll get a big gain. I like the company a lot. Good suggestion. Thanks for bringing it up. And I think what isn't being, the reason this thing doesn't make it into my screens that I've done recently is this PE 600. They're right at that kind of crossing point of being just wildly expensive. If you look at the PE to, hey, you fast forward a year, this thing's going to be very rational and that growth number is going to look really attractive. So I think having an early head start on this stock may prove to be a big winner. I'm going to study it. It's going to be on my homework list, and I'm going to go further post my live stream when I can sink my teeth into it, maybe spend an hour looking at it. I really appreciate you bringing it up. So right now it's like a very interesting stock. I really like everything I'm seeing. Needs further investigation. Okay. All right. So the other one that you were interested in is ALAB. I'll leave those open for later. Astera Labs. This is I'm going to call them mid cap, small cap. Companies are so expensive now. Revenue is 305 million. Okay. Shares outstanding. P is a little high. Strong buy, but they're priced a little bit expensively. It's been really moving 300%. What do these guys do? Astera Labs designs, manufactures, and sells semiconductor-based connectivity solutions for cloud and AI infrastructure. It offers an intelligent connectivity platform comprised of semiconductor-based mixed signal connectivity products that integrate a matrix of microcontrollers and sensors in Cosmos, which I don't know what it is, but I understand that, like the new high performance computing, they do these clusters of GPUs, and these things are really, really just accelerators for building large language models and these big workloads that AI requires. So it sounds like these guys are in that space. That connectivity of connecting multiple GPUs and so forth to make a supercluster, that's where these guys play. So really, on the surface, it's an expensive stock, but let's see how they're growing and see if it's worth that kind of money. They're growing at 282%, trailing 12 months. So, wow. They grew in the last quarter 958%. They are small, but that is extreme growth. And that's comparing Q3 of 2024 to Q3 2023. Incredible. Okay. So big growth. This is a young company. All right. Free cash flow, already providing free cash flow. Very good margins. Gross margins look great. Okay, so we have free cash flow at 91. Whew, that's an expensive stock. Okay, so I'm going to venture to guess that these guys have a decent balance sheet because they're so young. They probably haven't had time to pull a lot of debt. Nope. They have good cash. Okay. So 886. So this one here, it looks really exciting because of the growth. And the price of the stock has really moved up 300%. This is a expensive stock. I mean, if you think based on their current free cash flow for the trailing 12 months, let me double check that just to make sure I'm using the right one. So 91. So you have to multiply it times like 230, which isn't like out of the, kind of completely crazy. But what I would say is, who's their competitor? Is it conceivable that they have a timing advantage where, hey, these guys are providing this because the big semiconductor material companies haven't yet provided this, but once they get around to doing this, these guys are going to have to contend with some big companies. If that's the case, their revenue may really see a slowdown and they may get replaced. That's one possible risk. I don't know if that's a fact. And I think it requires more investigation and research. I think it's an exciting stock. Obviously, it's up 300%. I just don't see an obvious, discounted stock. It could be a really neat stock. Even analysts are saying it's priced a little expensive. And I would have to say that for now, it seems expensive. It seems a little risky. If we find out in 6 months that, hey, Samsung came out with um, a solution that's better than this, and Samsung is huge, these guys will never compete against Samsung or some other company that's big, has a lot of capital, has more credibility in the market. So that is it's an interesting stock. So you gave me two really interesting stocks that require more homework for me. I'm glad to do it because these are neat. I'm probably more interested in Aspen. I think that one is kind of right on the cusp of potentially coming out with more positive information and just beginning to rally. Astera, I think the rally's already priced into the stock. And now if they have a bad surprise, a negative surprise, this could sell off. And that's what I have to be careful of. And I will do some more homework on this. Thanks for bringing these up. Okay, so all right, so we went over those two. So we want to talk about Coinbase, which we will do. Thanks for showing up, Shane. Good to see your comment. Enovix is an extremely interesting battery company. Huh. Okay. All right, we'll take a look at that. And then Magical Self, good to see you. CRUS. Back to Aspen. Very cool. Okay. Yep. Getting the support of the government. Yeah. Yeah, and I've heard that the batteries, when EV batteries break out, it's really hard for the fire department to put them out. That's one thing I've heard about them. But I don't hear of a lot of fires. Like I'm in California and we got EVs coming out of our ears, and I don't hear of a lot of fires every once in a while. But I hear of a lot of regular car fires, and they're pretty tragic because sometimes people are trapped in the vehicles because you got this giant gasoline tank, on your vehicle. So it's not like, internal combustion vehicles are, low risk. They're risky. You want to drive carefully. You don't want to end up in a bad situation. But I don't hear of a lot of battery fires. All right. So let's talk about Coinbase. And I will analyze this guy later. All right. So Coinbase over the past year is up 55% over the last 5 years. This is interesting, right? It's only up 9%, but really the truth is I rarely buy stocks that are IPO'd for this reason is they tend to come in with a lot of fanfare. They might have a short-term rally and then they have corrections. Now this one's a doozy because they IPO'd the year before we had a bear market. So they really sold off 90%. Well, I started building a position here, and I must admit I bought some shares here. But my shares that I bought here, which is principally my investment, have really done well. And I'm glad I did so. Now, my investing thesis on Coinbase early was based on a couple of things. First is this is the most legitimate trading platform for crypto coins. It's publicly traded. Investor, or I guess customers, could probably feel the most assured doing business with Coinbase. And I believe that's the fact. Now, when I look at their fundamentals, in addition to that theory that I have, and I look at their fundamentals, I see some really positive things in the company. their revenue is tied to cryptocurrencies. If crypto is flourishing, they flourish. If cryptocurrency is coming down, they come down. And the trailing 12 months with Bitcoin just rallying the way it has, they're doing really well. Revenues are up. And they're a pretty big outfit, right? Revenue $5 billion. It's not like they're a $500 million company growing at 90%. That's some big chunky growth. And you look at their revenue. Now let's examine their gross profit and their free cash flow. So free cash flow, and let me go over, gross margin is 85.88%. That's an excellent gross margin rate. That's like software company. That's Microsoft. That's like really impressive. And we just looked at a really interesting company in Aspen that has a product that, shields batteries from vehicles. They were at 40%. These guys are at 85. That's really impressive. So I like that about them. Free cash flow. They're already cash flowing. They just IPO'd not too long ago. So it's a fast growth company that is cash flowing. So let me jump into the valuation I have for Coinbase, because it is an investment that I have. I've kind of been a long-term holder now in Coinbase. And I think the stock is fairly priced. If you look at their cash flows, it's discounted. If you look at the earnings per share, and maybe that needs to be updated, I'll take a look. I use a high PE with very little growth because Bitcoin could be volatile. It could go up and down. So I'd rather go with the 0% growth rate there. But overall, I think it's fairly priced. I believe in this space, so I'm willing to hold my Coinbase stock, and I continue to add Bitcoin. Now, let me take a look at the projections from analysts. And we've got 20 analysts covering Coinbase. They believe it's a buy, and it's priced fairly, kind of like what I'm concluding. You have some analysts that are like, man, these guys are going to be worth so much money. You have some analysts that are like, they're overpriced. But the overpriced thesis is not too bad. It's not like, oh, they're only worth $50. Now for 2025, their EPS is going to be $4.37. This year was very good year for crypto. Now, what do I expect Bitcoin's going to do 2025, 26, 27, 28 during the Trump administration? I believe it's going to rise. There's just a lot of things that are going to be helpful to the crypto space that the new administration is going to assist with. And I think it's going to be almost like a metric that the president's going to be proud of. Like, hey, I'm the one that built the crypto space. He's already been kind of a crypto participant. He attended a crypto conference like 9 months ago. If you recall, he is going to come out with a coin, I believe, or I should say the Trump family is going to come out with a coin. There's just a lot they're going to do there. So they see it as an opportunity. And I think that's going to be fuel for the industry. So what's interesting about Coinbase is the CEO, I've heard this rumor that the new president may select a crypto czar, like a leader for the crypto policy for the administration. And I heard the rumor that they may select the Coinbase CEO as that person. That most definitely would give Coinbase a lot of influence and probably cause the stock to rally. So my expectation, or right now, I think the stock is fairly priced. I agree with these analysts. I need to update my earnings per share, 437. So it's discounted by 3%. Now, I like the space. I think we've seen Bitcoin sell off recently. So I'm going to buy some Bitcoin today. I dollar cost average my investment. And I'm probably going to switch my position on Coinbase has been to just hold what I have, but I think I'm going to change that. I think I'm going to go to a buy. I think we're ready to buy some more shares. It's kind of sold off. There's a lot of things that I like. My investment in Coinbase has been 16,000. My stock is worth 39,000. So it's been a good thing, but I've been careful with crypto. It's not something that I've jumped into head first. Oh man, I'm going to put, half my net worth into cryptocurrency. No, I, went one step at a time and made sure that I wasn't taking too much risk, but I'm glad that I've learned a lot in that space. So I'm going to be buying Coinbase. The other things can go right for it. The power of dollar cost averaging is that I don't have to be perfect. I could just know that I think in 5 years, Coinbase is going to be worth a lot more. And between now and 5 years, as this chart would prove to you, you're going to have volatility. But ever since kind of getting to the low point, and a lot of stocks sold off in 2022, Coinbase not being the only stock that sold off during that time, this return's just been phenomenal. So that's been an upward line. As crypto becomes more mainstream, more people are comfortable with it, more demand is placed on the Bitcoin as well as Ethereum and other things. This stock's going to continue to trade, up. So that's my opinion on Coinbase for me. As always, I'm just one investor sharing what I'm going to do. I'm never providing financial advice. I'm never recommending you buy, hold, or sell any stock I talk about or any cryptocurrency. I'm just sharing what I'm doing, and hopefully you find it interesting. All right. So Coinbase. And I don't go with ranges on price. I guess my style is, I think the stock's fairly priced. And where do I think the space is going to move in 2025? I think it's going to go up. It's going to go up over the next 4 years. So I'm good buying on that kind of big picture kind of mentality with qualitative kind of decision making on top of fundamental quantitative analysis. So thank you for asking. All right. So I think we're going to look at that one later. And okay, cool. So I think caught up on comments. I see some people on. Thanks for joining. And if you'd like to talk about a stock or a topic, please put it in the chat. We can cover it. All right. So we're going to move to Enovix. So Enovix Corporation designs, develops, and manufactures lithium-ion batteries. It serves wearables and IoT, smartphone, laptops, and tablets, industrial, medical, electric vehicle industries. They're in California. So the stock chart, they haven't gotten like momentum to the upside other than it, flying up, and then in 2022 things sold off. Let's look at their fundamentals, see what they've been up to. So the market cap is 1.96 billion, small revenue, 20 million in revenue. They've been around for a little while. Okay. They've lost a lot of money. So you see this extreme revenue, but you're going from 7 to 20 and you've been around for years. So I'm not liking those numbers. Burning cash, no real gross margin. This is a startup. And let's look at the balance sheet. But the thing about this company, either they have 200, so they have about net cash of 3 million. They owe almost 200 million. They have about 200 million, and they're burning cash. This is a very risky stock, and that's why the chart's this way. So here's my high level qualitative kind of like, this doesn't fit, right? And when did these guys get started? 2006. They're not like brand new. They're 18 years in the making. And they only have $20 million of revenue. So if I'm reading this right, they were founded in 2006 and it took them 18 years to get to 20 million. This is like dead on arrival for me. Super risky. If it took you 18 years to get to 20 million, is it going to take you, another 18 years to get to 100 million? You're burning cash. Your balance sheet's super risky now. The market doesn't believe in you. In this time, this is a space that's attracted a lot of investment innovators, companies, and these guys probably have some pretty tough competitors now. They may have had an idea way back when, but they did not execute fast enough. In technology, if you do not execute quickly, you will be replaced. People will leapfrog you. And it seems like Enovix is, in my mind, a super risky stock that may have short-term gains, but I think in general, I would stay away from this stock. It just has too much risk, bad balance sheet, burning cash. They didn't grow fast enough. So that is my opinion there. So CRUS. So Cirrus Logic. Cirrus Logic is a fabless semiconductor company, develops low power, high precision mixed signal processing solutions in China. Okay. Okay. 5.46 billion in market cap, revenues 1.91 billion. PE's reasonable to buy, discounted 29%. It's in China, so it's, automatically you get the China discount. Their growth isn't overly exciting, growing at 8%. This is kind of a value stock within semiconductor. So free cash flow is very good. Gross margins are very good. So valuing Chinese stocks is more of an art than it is a science right now. You could look at two companies that have identical fundamentals. The one's in the US, one's in the Bay Area, California, and one's in China. And the Chinese stock would trade at least at 50% the value of the US company. It might even be at 25% of the value of the company. That's just the way things are. It's not my rule. It's just my observation. So these fundamentals look good. If you value this company with the small growth, well, it's pretty good growth. Let's look at the quarterly. Look at the quarterly. It looks really good. This stock is worth like $7.5 to $10 billion, assuming their balance sheet's good. So this is a discounted stock. You have cash well above debt. This is a discounted stock. It's just, I could show you 20 discounted Chinese stocks and the market just doesn't buy them. You can look at Alibaba and say, man, Alibaba is kind of it's Amazon 2.0, but it serves the Asian markets. It's like, I like it, hey, great. Amazon 2.0, and they're going to operate in an area that's growing faster than we're growing here in the United States. But Alibaba just does not rally. Amazon does. So this one here is fundamentally discounted. Is it going to rise? And I would say I'm agreeing with these analysts, but I don't know that anybody could tell me that what's going to happen with valuations in China. We have a president that's going to go into office, and I don't think he is shy about going after China and putting probably some headlines out there. They're just going to make the public, investors, the markets concerned that, you know, the tension between China and the US is just going to continue to be high or maybe be raised. And both sides are going to posture and try to be the tougher of the two. So this one here is discounted. I agree with that. But you got to make that decision on how many Chinese stocks you're going to own. I have some long-term Chinese plays. I mean, Alibaba, I'm good with that. I'm going to hold it. And I own an ETF, which I'm happy to own. And I think that the Chinese economy is growing much faster than the US economy, almost double. And at that growth rate, they're just going to have more addressable market. You also have more organic growth there, meaning, to use an example of Alibaba, here in the US, we were, if you consider the world, we were the early adopters for the internet and buying stuff online. And we kind of take some things for granted that we've had for 10 years that people in China and other places in Asia, maybe they've only been on those platforms for 2 years and they're beginning to really buy and invest and do things that we've been doing for 10 years. Well, that's organic growth to me. You're bringing in new customers that didn't exist 2 years ago. And I think Alibaba has more of that opportunity than Amazon. I'm an Amazon stockholder. I'm an Alibaba stockholder. I'm playing both sides. I think both sides are going to do well. And this one here, Series Logic, these guys are going to be performing well. You're just going to have to accept the China discount. Like Chinese stocks are going to be discounted. They will never, all right, never is a big word. It'll be a surprise to me if we ever get to a day where they're equal. Like the company can be in Shanghai or it can be in Fremont, California. They're the same fundamentals would be priced the same way. I don't think we're going to reach that point. Thanks for asking. Hopefully you found that interesting. And Shane, thanks for tuning in, man. It's good to hear from a new attendee, or at least read your comments. And yeah, Innovex is extremely risky. And, I'll take a risk on businesses that I feel like I understand and maybe have a knowledge, asset advantage. But in that space there, I just think just some high level observations are just too alarming. Like they've been around for how long, and your revenue is only 20 million. You're burning that amount of cash. You're out of cash if you really understand debt. I would stay away from that. We've been in a boom period for 2 years with stock prices, right? And I like the term that Warren Buffett expresses, which is it's when the tide goes down, when you have low tide, is what enables people to see who's not wearing any clothes. And what he means is there's a lot of companies out there that are barely hanging on, maybe have too much debt, maybe are too risky, maybe aren't, selling enough. And when you have a down market like we had in 2022, all those companies get exposed because now you're comparing them to really good businesses like Meta or Nvidia and when you compare the two, you're like, I'd be crazy to buy that, risky company that hasn't really done much, that is in trouble. I'd rather buy this really good company just because the market's sold off. And we're not going to get that type of, I would say, cleaning out of risky stocks that are overpriced until we have a bear market. And I don't know when that's going to happen. All right. ODD is a good makeup company, another high growth, utilizing AI tech. Oddity Tech operates as a consumer tech company that builds digital first brands for the beauty and wellness industries in the US. So I have seen this kind of like, as I watch business channels and stuff. Now, I'm at a disadvantage, obviously, because I don't wear makeup. Um, I'd have to ask my wife, and I would guess that she's gonna be like, "No, this is insane. I would never do this." But I think what you can do is basically, you know, use technology to help you have the best cosmetics, based on your skin tone. And hell, you could probably have a digital experience of, how would I look with this type of tone? And I don't have a lot of knowledge when it comes to makeup, so I'm going to make my terms, and I'm probably using the wrong words, but you probably want to put the right tone, lipstick, and eye stuff they put on, and eyebrows and all that stuff. Maybe they want to change their hair color, and rather than, traditionally you go to the beauty parlor. That's how old I am, and how, like, I go to a barber. So you go to the salon, excuse me, you go to the beauty salon, and you say, hey, I want to try something new. I want to go from being a brunette to a blonde, or a redhead or something. And they put in that color, and then voila, the reveal. Well, wouldn't it be cool if technology said, no, you don't have to go through all that and take the risk of not liking what you ended up with? Just kind of use technology to, change your look and see what you're going to look like. So this is who they are, their brands. Okay, cool. Now, in my family, I'm outnumbered by ladies, and this might be a neat little stock to cover at our next tech get together and get their opinion. Okay, so we got a $2.5 billion market cap company, 620 million in revenue. They are profitable. PE is reasonable. Analysts think it's a buy, and it's discounted a little bit. Good growth. 30% is very good. And the stock hasn't really been all that sensational. Huh. Why is that? So they IPO'd in 2023. IPOs just didn't exist. And I'm not going to dogpile on the previous administration, but that's a sign that you're just not getting it done for the economy when companies are not IPOing. We're the United States of America. We have entrepreneurs. And if anything, the government should always be monitoring. If we don't have IPOs, we're doing something wrong. And I think the previous administration was anti IPOs, anti mergers, anti, like, I think they wanted everybody to be a mom and pop business. And sorry for dogpiling, but here's an IPO. They seem to have a pretty neat business. It's growing, but their stock's not moving at all. Good to see you, Tomas. Buenos dias. So let's take a look at, so their revenue is growing. Very good gross margins at 71. They produce free cash flow. So I like this, and I like this. So their year is going to end December 31st. Okay. I'm going to guess their balance sheet's good because they're so young. Debt's 23, cash is 147. My assumption was correct. How many analysts cover it? 7 analysts cover it. Collectively, they believe the company is going to keep growing really nice, 20%. That's getting it done. And if these guys have kind of a spin on or a unique proposition in beauty, totally see an acquisition. One of the big brands, because there's some big ones in this space, they would come in and acquire these guys. Hey, we want you because we want to, these beauty brands have to continue to be a fresh brand, fresh company. Like, hey, we're bringing out stuff that our customer base is excited about. We don't want our competitors to come out with stuff that our customers get excited about, because then they're going to leave our company and go to our competitors. So this is looking interesting to me. It's priced well. I think if you look at their free cash flow, is 126 million. These guys are worth 2.5 to 3.5 billion. And if I'm confident in the business, I think these guys are worth 5 billion. So this isn't a bad idea. When do they announce? November 6th. So they're going to announce again beginning of February. This one's a good one. Oddity Tech. I'm 100% not in beauty. And this might be a neat conversation piece with my wife. So I'm going to bring my wife into the conversation on this one, do my homework. I like it. This one here is worth the money. And if you do believe in the business, might be a good investment. Their IPO, this is a recent IPO. Remember how I showed you Coinbase? Usually IPOs go here. So it takes like a year and a half to see, okay, was there a lot of fluff in that IPO? Because once you start seeing their financials, you see, okay, what have you done? Like, give me data. And okay, I've got data that I've been growing at these rates. And these are audited numbers, right? The auditing firms audit these numbers to make sure that they're accurate. So I like what I'm seeing. This is a small cap. It's in a good space. It's a software infrastructure play. I'm going to study this one a little closer. Thanks for bringing it up. So I have a wife and daughter at home. So the lipstick index is a thing. Women like to spend on lipstick in a reception. Interesting. Never knew about the lipstick index. I'm going to have to add that to my market, metrics that I need to bring into the loop. I know Warren Buffett bought into, was it Ulta Beauty? And then he got out of it. Ulta Beauty, reason I didn't like Ulta Beauty and a lot of those beauty brands is their cost structure is so darn expensive, right? Ulta Beauty is really a retailer and they're selling a product. They make good money, but man, it's a competitive space and you're hiring a lot of people. You're paying them a lot. You're retail. There's a lot of theft in retail. There's just a lot of disadvantages there, but that's not oddity. Oddity is like, hey, we want to, and I'm sure, like, I don't need to convince anybody that people under 30, technology is like second nature. And I could tell you that, like my family, I've got nieces who have kids. And so I've got girls and ladies in my family from the ages of 1 to 50. And so the younger crowd, man, they're all over technology. They're teaching me stuff. Like when we get together over the holidays, I feel so far behind in some areas because socially they are like on it. It's like, oh yeah, did you hear about this or did you know about that? And I'm like, no. And they show me stuff on their phones, and it's pretty impressive. So looking at oddity, yeah, it makes a lot of sense for where we're at. It's 20 soon to be 2025, and I'm sure girls, ladies, women are like, hey, rather than going old school and going to the makeup counter at a department store, I'm going to use technology for my process of being beautiful every day. We're starting to see more opportunities. Maybe. What's the market doing today? So the market's down a little bit. So it's really easy to see. In hindsight's 2020, right? But when you have these big moves like the Nasdaq over the course of a month went down 30%. Okay, there's opportunity there. Okay. And FYI, if you go to 9/11, if you go to the Great Recession, all those periods were the best time to put more money in the market. That's one thing I did every single time this happened. And every single time I'm like, I just turned $10,000 into $20,000 in 1 year. And it's like, that was smart. I had to like trim the belt, work a little harder, work a little smarter, make some money, put it in the market because it was a great time to invest. And again, back in 2022, just things were sold off. So it really presented opportunities. I mean, across the board, Nvidia was sold off, Meta, you just name the company was probably sold off with a few exceptions. But when we get into this rising market, I actually think it's harder to find really good opportunities because even if you found a really good company and we have a downturn, it's going to be sold off. So then you feel like, well, I should have like waited a little bit. So I think it's always a great time to learn. It's always a great time to see what is not being recognized as value. I think we've looked at a couple of areas, and I had this screener open. Here we go. So we did this on a live stream. I think I used this yesterday. And on the investor weekend sessions where we talk on a conference call, Tomas and I have done stock screens. And we got to a lot of companies that look like Harmony. And Harmony is a biotech company. This space has been unappreciated over the last couple of years. This is biotechnology. This is your life is on the line, and these guys created technology. It's going to save your life. So you pay what needs to be paid. And you're very thankful that these guys put in the science. And you look at the company like this, good growth, just crazy growth back here. You look at the stock price, it's been sold off. So it's like, why is that, right? It's just the market is obsessed with technology, semiconductor, some pieces that are really working like AI. And it's taken its eye off of a sector that in the past has really worked. Well, at some point, the market's going to start paying attention to these, and it already is. I mean, for the year, this one's up 6%, but I could show you some companies that are in the same industry that are doing quite well. And this company, look at the P, 16, 11. It's a buy. Even analysts are saying it's a buy, 44%. So this is a good opportunity. And I'm buying into this space because it's somewhat of a contrarian move. Yeah, I want to hold my technology positions, want to hold my position in Meta, Google Alphabet, Amazon, and so forth. But if that were to turn and maybe go down a couple notches in prices, maybe investors are like, hey, we got to get back into biotech because these companies are making it happen. So that's an example of where there is opportunity, but you got to, I think you got to work a little extra harder to find it. What's another interesting thing that a lot of asset management's out there, but I'm not a big asset management guy. Double Down Interactive came up in the screen, and then insurance. Insurance has been working. I'm going to get into Chubb early in 2025. So there's still opportunity out there. It just gets a little harder. And I would encourage you to be patient. Be active, but be patient. Don't try to hit home runs. And you're in Argentina, so maybe I shouldn't use baseball analogies. Um, try to be smart, always learning. But we've picked up on a couple of good stocks like Mercado Libre. I just showed Harmony, United Therapeutics, Catalyst Pharma, and what are some other stocks that I'm buying? I'm buying into Amazon, just building a position into that. Citi's a good buy, but for young investors, this is a boring stock. This is for old dudes like me. But Catalyst Pharma is good. United Therapeutics is good. 3M is a good buy, but again, it's not going to change your life. But Uber, I think, is a good buy. I think if I put $10,000 into Uber today, it's probably going to be worth $50,000 in 5 years. And I think there's a lot of things going for Uber. In fact, there was an article on Uber and Waymo that I wanted to cover. So we'll cover that later. Qualcomm, I think it's a good buy as a semiconductor company. I'm short Broadcom. I'm short NVIDIA. Buying into Adobe, I just think it's a great company. And these are my holds, but I'm not saying they're bad stocks, but I just have enough, right? $40,000 of DocuSign, $45,000 of Zoom. Zscaler is a good stock that I like. So I like new holdings. Mercado Libre, I plan to buy some in 25. New holdings, Chubb, Lantheus, which came out within the community. This looks really good. This is probably better than Harmony that I just showed you. That one looks really good. Bit Digital, and then Lam Research. I'm very positive on Lam Research. So there's always opportunities out there. It just gets harder. So, and remember, like for you young investors, you have like so many years to just continue to get better. But if you come to my channel, I will try to be a value add kind of source, and by sharing my experiences and so forth. And also just try to give you my honest kind of observation. We're in an expensive market, and that's my observation. All right, so one more. MNSO. So Miniso Group, an investment company, engages in retail wholesale of lifestyle products, pop toy products in China, rest of Asia, Indonesia. Okay, so they do toys. Let me open up their website just to take a glance at it. Yep. So blind box, you buy a box and you don't know exactly what's in it. It's from a collection, but you're not going to know what you get until you open the box. Okay. Well, that's fun. All right. So we market cap 7.69 billion. The stock hasn't been a super winner, but it's up 27% in the last year, and it provided a nice opportunity recently. You could have picked up the stock nice and low. It's really run up. It's now, analysts are saying it's a little expensive. 7.69, 2.5 billion. PE, I mean, these are rational PEs. Revenue has been nice growth. Okay. Looking at the quarterly, growth looks good in the last couple quarters. Okay. So gross margins are good at 44%. That's like Nike, which is in their space. And free cash flow, 1.6 billion. That's really good cash flow. 6 billion. It's grown over time. That looks really good. 1.6. This company's worth, you could say it's worth 16 billion, most definitely. So it's unappreciated. If they can keep this growth going, I'm not an expert on toys. I just think that it's a space that if your toys become if it's a fad toy and it's good for a year, 2 years, and then your revenue drops, your stock is going to drop. But right now, a lot of things look good. I think its valuation is unappreciated. It's discounted. Let me take a look at their balance sheet. Maybe that's kind of a blind spot to me. They have more cash than debt. Strong company. This is a good company. Not overly priced. We're getting through the Christmas season. Man, why couldn't we have had this live stream on September 24th? And we could all jumped on this stock. Went from $13.40 to $25 a share. All right. Stop dreaming out loud. So it's gone up a lot. So this is a little bit like, oh man, what's going to happen? But I think it's discounted. This is a good stock. It's discounted. I don't know if I would wait a little bit for it to drop, but it may be telling me like, hey, you better get in before I go up again. I'm really impressed with this company. I don't have expertise in this space. I think I've disqualified myself twice now. But these fundamentals are great. They're profitable. Now, these guys in China, I think they were, right? So retail. Of course, if they're in China, it may have that China discount that we were talking about. Yeah, they're in China. So here we are, Chinese stock, discounted. Will the market ever bring it up to the value it should be at? Probably not. Chinese stocks get discounted, even though the fundamentals show that they're valued much more. So I wouldn't be all that interested because it's in China and I already own a few positions in China. I'm good. This shows that it's discounted, but it just is what it is with the market. Chinese stocks get discounted. It's just the way it is. What's Mercado Libre doing today? Oh, yeah. All right, cool. I like this pullback. We were looking at this stock here. I did a video like around here. It just kept going up. I'm like, come on. And I ended up buying Amazon instead. Now it's come down. It's like, okay, here's my opportunity. Maybe I got to buy Mercado Libre today. Yeah, this is a good space, good company. So Amazon most definitely is the dominant US e-tailer, right? They are doing great. Latin America, Amazon's doing okay in Latin America from what I've observed. But I think if you have a company really focusing on what really works down there, I'm sure that the catalogs need to be specific to Latin America. Like some things in Mexico, speaking for myself, there are some like quirky things in Mexico. And if you have an e-tailer that understands that probably can cater better to that market, can market better, can communicate better, they're just going to have an advantage. And I think Mercado Libre has those advantages down in Latin America. So I'm looking at the company saying these guys are going to keep getting it done. And they're already, a very successful enterprise with great growth. Good free cash flow. It's grown over time. See, this is a beautiful data set. Growing over time. Their gross margins, very consistent. So I like Mercado Libre. I think it's discounted by 33%. I think it's going to be worth a lot more in the future. So I'm going to buy Mercado Libre. I'm going to buy Mercado Libre today. That is going to be on my trade list. Okay, so Mercado Libre, Uber. What's Uber doing? Oh, that's right. I wanted to talk about Uber. I wanted to talk about this one story that I thought was a good one. So Uber is down again. And what caught me by surprise, I covered this stock yesterday and I thought, man, did I click something wrong? But I looked at the 1 year and I'm like, what? It's flat? Uber? At one point, right? Uber just looked phenomenal. Look at that. It's 47%. Beautiful. If you look at the low point at the beginning of the year to that point, up 50%. So I like my Uber position. Okay. Now, over the past, I guess coming up on 2.5, 3 months, the stock's down 29%. Why? Well, because the market thinks robotaxi is going to eliminate Uber. And I'm like, I don't agree with that conclusion. And I think their network is really valuable. I think companies like Waymo, which is the leader in robotaxi so far, I think they'd be better off partnering with Uber. So we're going to get into this article and I'm going to point out a couple of things that are evidence that my qualitative assessment and my qualitative prediction and my thesis is not, it has some merit. So Amazon started Zoox. They're going to start it in Vegas. I don't know if it's operational yet or if it's going to be at early 2025, but if you go to Vegas, you'll be able to take an autonomous ride, probably from the airport to your hotel or your Airbnb using Zoox. Okay, cool. Tesla, of course, they had like a huge event, but they don't have a car. They don't have a commercial available, made it through all the hoops, ready to go vehicle, but they say they're going to do it. Same like the truck, Cybertruck. We're going to have this truck. It's going to be great. It's going to come out next year. And it took 4 years to get to that moment. So maybe it's going to take Tesla, I don't know, 2, 4, 10 years. I don't know. We'll see how long it takes. So I believe, so a couple of things that I'm going to point out. So Waymo is definitely in the lead and other companies have dropped out. GM out, Ford out. And Waymo, Alphabet started investing in autonomous robotaxi in 2009. Okay. So 15 years of investment. This is not easy. So Tesla's like, piece of cake. We'll do that by the end of the week. Right. Yeah, we'll see when you get it done. Waymo's in Phoenix, San Francisco, LA. They're not on freeways yet. And I saw this other report that they are testing on freeways because I know that's important in California and as well as like Texas and stuff. All right. And I wanted to get to, so Google Alphabet's going to spend more money. They're going to invest $5 billion in it. I think it's a good idea. I'm a Google Alphabet stockholder. And this is the money. They're going to go on Uber for Austin, Texas, and Atlanta. So this kind of, Uber has the best user base in the space, period. Over 1 million people hail a ride on Uber every hour. They're huge. You go to the airport, Uber is number one. You go to anywhere, Uber is number one. So Waymo's partnering with Uber, and I think that's going to scale up really fast. And from what I understand for Google Alphabet is they're not a type of company that really likes like low margin businesses, and they don't like, retail businesses. Like YouTube is a really good example. They provide the platform. They don't create any of it. They do create some videos, but majority of videos out there are created by people like me and content creators. And they don't have like a customer support line. You get everything self-service, and it's a very profitable endeavor. Google search, same thing, very profitable. Their Google Cloud business, very profitable. So I think they're going to launch Waymo and make it a platform, and then depend on Uber, who's has the greatest level of expertise in making it work, you know, at the customer experience level. This is what I'm excited about, both for Waymo and for Uber. And it's the company's has plans. So Waymo plans to offer autonomous or robotaxi in Miami as well. So really good news for Waymo, but really good news for Uber. So back to, is the market not reading the same reports I'm reading? Why does it think that, yeah, Uber is not going to be relevant in robotaxi? They're going to be very relevant. And they also partner with a Chinese company, and they are going to do autonomous in, I think, Abu Dhabi is the location, which is in the Middle East. I'm not going to search for it because that'd probably give you a headache. But that's, the market sometimes discounting a stock for no reason. I think Uber right now is nicely discounted. Uber continues to grow. They continue to expand the amount of cash that they're making. And I think they're discounted really nicely because of that pullback. So I'm big on Uber. I'm probably going to buy some Uber today if the stock continues to trade lower. So Rotel and cheese, it looks like Minuso is in Europe and in America. Cool. Yeah. But the company's headquartered in China, and its products are out there, or its principal locations in China. Okay. So Mercado Libre is huge down there. Yep. Very good. Good to know. Booyah in Mexico. Yeah, Walmart in Mexico has done really well. Yeah, good luck with that. I hope it continues to work for you. I've noticed that's a pretty good stock down there. Yeah. You bring up a good point. I would say every time I talk about a Brazilian investment, it seems like a lot of people are concerned about the Brazilian government. So I think I'm going to do some homework there. And I'm not informed enough, but what's going on is like, all right, Google Gemini, let's get to work. Recent stories on Brazilian economy include stronger than expected economic growth. Okay. Inflation concerns. Okay. Okay. So I'm going to read these and try to see if, what's going on down there. Because, I mean, I don't focus on South America. I'd love to get Tomas's kind of observation. He's in Argentina. I'm in Los Angeles in the US. I don't get a lot of news feed for Brazil. Maybe he gets a little more, because like I get more news feed on Mexico because it's right next door. Well, he's right next door to Brazil, so maybe he's got a little more of a qualified observation. But I'm going to read this because I keep hearing this, and I'm like, okay, well, I gotta look at it because I'm hearing it from multiple sources. So I appreciate you bringing it up. All right, so we covered Uber. I think I covered the space that I wanted to cover this morning. We've been going for about an hour and a half. It's been a good stream. Let's take a look at the market, see what's going on. It's pretty flat. It's actually making a little comeback. The Russell is coming back. Go Russell. S&P. I think the volumes are pretty low, but it's pretty flat. I'm good with that. What's crypto doing? Crypto's still down. Probably going to buy some crypto today. Okay. All right. I'm cool with that. So left-leaning government corruption, higher debt being taken out. Okay. So don't take this the wrong way, but that's kind of like, I mean, I hear that about like all kinds of governments. And there's always kind of like criticism of governments, right? So I'd like to get to like what's economically happening with the country, and try to make some sense out of it. I would agree that if I make an investment outside my home country, I want a higher rate of return because I could tell you like what's the political sentiment in the US. I could tell you, okay, we just had an election. Okay. But I want a higher rate of return when I go to Brazil. And I've gotten some feedback on that number, which is, well, their inflation rate's like 15%. I'm like, yeah, but I'm looking at it from a dollars and cents perspective in the US. And it's not all Brazil. These guys are in Mexico. Mexico's economy has been growing well. Their middle class keeps expanding. And they're in other places of Latin America. So it's not like a one country play. So I think I'm kind of covering the bases. And of course, investing is not like, risk free. Investing is about making the best decision you can, like Uber. Everybody's selling it off. Well, I'm buying it. Why? Because I believe in the company. Is it risky? Yeah, there's risk. But when it works, I make money. And when it doesn't work, I have to sell the stock or lose some money. Overall, I made good returns in 2024. If I keep making good decisions, I'll make good returns in 25, 26. So that's what's awesome about investing. All right. So we are good to go. Market is flat. Look at that. Now the Dow is green. The Russell's green. Man, I gotta get my trades in before it starts flying up again, like it did on Tuesday. So everybody, thanks for tuning in. Really appreciate it. I know we're through Christmas, but happy holidays. I don't know if I'm a little older, so I don't have any big, New Year's Eve plans. I was in New York, about a month ago, and I was in Times Square, and the place is packed. It's like, oh my God, it's neat to do it, right? I've been to New York like 4 times, and I've been to Times Square 3-4 times, and I do it so I can kind of like just experience it. Like, man, this place is so crowded. There's so many people here, and it's like overly like sensory overload. And I just think about New Year's Eve, that area is just packed with people, like shoulder to shoulder is an understatement. It's like squished together. And I'm like, I just, no, thank you. I'll watch it on TV. I've been to Times Square, but not during, New Year's Eve. Whatever you're going to do, have fun. I'll try to have fun, but it'll probably be toned down. My rock star days are way behind me, if I ever had any. So, all right, everybody, have a very nice day. Good luck with your trades today. Good luck with your investments. And I'll be back and I'll stream tonight. I think I'll probably start around 4 p.m. Pacific, 7 p.m. Eastern. If you want to talk a little more, tune in. If you want to actually talk, join the community, and we will talk on weekends, and we'll talk about stocks. We do workshops, and details are in the description of the live stream or just about any video on my channel. It'd be great to have you guys. Based on the comments, you guys bring a lot to the table. You can also join us on Discord, and we have a pretty active Discord, and we go back and forth on stocks, share ideas, opinions, comments, and it's pretty lively. So you are invited. All right, everybody. Have a great day. Take care.